Hi, it's John from First Things First, and today I'll be sharing how much deposit you need to buy a property in Australia. Well, unfortunately, there isn't a one-size-fits-all answer here, but let's play out a few scenarios we hear all the time when speaking to first home buyers. Scenario 1. I've saved 20% of the purchase price for my deposit, or I can borrow some money from friends or family to help me get there. This is an ideal scenario because a 20% deposit ensures you won't pay lender's mortgage insurance, which can be as high as $12,000 to $15,000 in additional upfront costs, or this amount gets added to your loan. Having a bigger deposit also gives you a greater chance of accessing a better interest rate for your loan, which means less money coming out of your bank each month to repay the mortgage. On a $600,000 property, 20% of the purchase price is $120,000. Just remember, there can be other additional upfront costs you need to be aware of when buying property, like stamp duty and conveyancing costs. I will add a link in the description below if you want to know more about these costs, so you have a complete picture when budgeting for that all-important first home. Scenario 2. I only have a 10% deposit and I'm in limbo over whether to buy. We speak to a lot of first home buyers who are reluctant to pay the lender's mortgage insurance and think, I'll just wait until I have the full 20% deposit. It is important when making this decision you factor in how long you will need to save that extra 10%. If the answer is 2 years or more, please remember, what you could buy today for $600,000 compared to 2+ years down the track is likely not going to be the same. For example, you might find yourself looking at a 2-bedroom apartment instead of a townhouse, or buying in the next suburb out, away from the city. Rising rent and changing interest rates throughout those 2 years could also impact how long it takes you to save the required amount. We call lender's mortgage insurance an opportunity cost because it gets you in the market today at today's prices and stops you paying rent sooner, which is great because rent is effectively dead money. In 2 years' time, if property prices in your suburb have increased by 6%, you have already justified your decision to act now and pay that cost. When you look back in 10 years' time, you definitely won't remember that extra $10,000. Scenario 3. I have zero saved, or I have a 5% deposit and unsure of my options. The good news is, in 2019, there are some lenders offering a 5% deposit home loans if you meet certain criteria, which means on a $600,000 property, you will only need $30,000 for your deposit. The government are also launching the First Home Loan Deposit Scheme, which will give a pool of first home buyers the ability to avoid the lender's mortgage insurance costs and still access loans with as little as a 5% deposit. You heard me right, the government are absorbing your LMI costs. It is worth noting this scheme is kicking off in January 2020 and is limited only to 10,000 applicants across Australia. This scheme also comes with a first-in, best-dressed policy, so considering we average approximately 100,000 first home buyers per year, you might need to act fast to take advantage of this. If you want to find out if you could qualify for this scheme or have questions about your own scenario, I would definitely encourage you to get in touch with us at First Things First and speak to one of our property or mortgage experts. I hope you found this video useful and you took something from it. Leave any questions you have in the comments below and hopefully we'll see you on the next one. Thanks.